Yo guys, FFX, welcome back to another video. Today I'm gonna be showing you guys how to identify low resistant days, right? What are low resistant days? Simply days in which you look to take the highest probability of setups, right? With little to no resistance, if that makes sense, right? And this is approached typically on a day-to-day basis and can also be utilized on a week-to-week basis, right? So with a little benefit of hindsight, we're gonna be going into I don't know, bar replay and then just clicking wherever. Let's see. Before we can begin, right? What are low resistant days? It's pretty much when we pretty much continuing yesterday's trend, if that makes sense, right? In other words, even this one is pretty much perfect, right? Yesterday was a bullish day, right? Meaning that price swept yesterday's high, right? And stayed nowhere from yesterday's previous day low, right? So, in other words, when we're looking for higher prices, right, we look to see price. We look to see the next candlesticks as a continuation on that specific direction, right? So in this case, price is bullish, right? So as this candlestick, as the daily candlestick, right, closes within this range, right, you're gonna mark out the previous day high and the previous day low, right? In this range, right here, this range is your liquidity when price opens, and you want price to go to it and through it, if that makes sense, right? And you want price to reach nowhere near the previous day low, right? So in other words, if we're approaching the new day, which would be Wednesday, right? We'd expect Wednesday to be a continuation of um, Tuesday, if that makes sense, right? So in simple terms, our minimum or our drawn liquidity is pretty much the previous day high. If that makes sense, right? Let's see. Price sweeps it and then goes back into the range, right? So we're pretty much expecting our setup to form within this range, if that makes sense, within this range. On lower time frame, this would actually be high high probability and high movement or high movements in volume or pips, if that makes sense, right? So now when we have price between two ranges like this, right, where price sweeps the previous day low and then previous day high, right, and then stays within it, we regard this as an in-day close range, right? This tends to indicate reversals or ranging, meaning that usually when price is within a range of two, when price is within a range of the previous day and the previous day low, right, we just look to see what the next day is gonna form, right? We pretty much neutral. We're not executing any trades, right? The price closes below the previous day low, right? So like right now, our drawn liquidity would be the previous day low. If that makes sense. Price sweeps it. Our next drawn liquidity is the previous day low. Price sweeps it. And then what's important is that price needs to close below the previous day low, right? So when price fails to, right, we regard that whole range as an in-day close range, right? Therefore, we're not executing any trades because that could be a potential key reversal area, right? That could even be supported by this BZ right here, right? Meaning that price could have just tapped it to move higher. So this day would regard it as a neutral day, right? Meaning that the next coming day from this range is our neutral day. We're not looking for any setups until price closes above or below the previous day high or low. Price does that, it sweeps below it. So like right now, our drawn liquidity is this low. And also pay attention to how price sweep the previous day high and low, right? You typically do not want to see that form when you are looking for shorts. So like right now, our drawn liquidity would be the previous day low and would want to see price sweep or draw to the 1 day fair value gap low. Let's see. Price sweeps it and then reacts off it, right? So would have been out the trade. back into an in-day close range, right? So we pretty much neutral, but price would be most likely drawing to higher prices based on this fair value gap range right here. But like now, let's just pay attention with neutral. Price sweeps it, right? And then now our drawn liquidity would be this high. Looking to see price sweep that high. Price fails to, goes back into the range. So this could have been a losing day. Now we're back into an in-day close range. So therefore, we're not looking for any trades within this range. Price sweeps it, still an in-day close range because it closed inside the range between the previous day high and low. In-day close range. Price draws lower, sweeps the previous day low, right? Now drawn liquidity would be this low. Price sweeps it, goes back into the range. Would have been a profitable day if your profile formed at that day, right? So like right now we're neutral. Still neutral. Still neutral. Right now, price closes above the previous day high, right? So now our drawn liquidity would be this high right here. Price sweeps it. Price, our drawn liquidity will be this high right here. Price sweeps it, goes back into the range. So the next day, Friday, we're not looking for any trades. In-day close day. Going into Monday, we're not looking for any trades. Tuesday, now we pretty much looking to see price sweep the previous day low. Price that goes back into the range. So this could have been a classic Tuesday low of the week. Potential reversal higher, but we're not looking for any trades. Price sweeps the low. Our drawn liquidity is the previous day low. Price sweeps the low. Our drawn liquidity is the previous day low. Right, and then price reverses. So this can also be utilized two ways based on the weekly and the day time frame. It's pretty much fractal to any time frame. And this should be an additional confirmation on a already existing idea, if that makes sense, right? So if you can pay attention right now, this is a in the close week, right? So the next coming week, we pretty much would not be looking for any trades, or would be focused on daily previous days highs and lows, if that makes sense, right? In the close, let's see, if price closes above this high, then we'll be looking to see the previous week high as our drawn liquidity. Okay, it does that. Our drawn liquidity would be this high. To it and through it. Let me just increase this. Let's see. Drawn liquidity is the previous week high. Fails to reach there. We're in an in-day close week, so low probability week for trading. Price closes above. Our drawn liquidity would be this high. See? Price closes above it. Let's see. Yeah. So hopefully this made sense, guys. I just wanted to make this like a quick and short video of how you can use this method as extra confirmation for an existing bias, right? So generally how I utilize this, right, before I can execute a trade on a day-to-day basis, I just like to click bar replay on the previous day, if that makes sense, right? And I want to see how price is behaving so that I stay in sync with it. Then it helps me pretty much filter out bad trading days and weeks, if that makes sense, right? Because with this game, patience is required, right? We're pretty much here to make money. So us always being in trades just because we want to be in trades is not the way to go, if that makes sense, right? So hopefully you found this video helpful and enlightful. So if you liked it and got any questions, just be sure to hit me up on the comment section or on social media platforms, right? So hope everybody had a good day, blessed day, stay safe.